welcome to FountainFX on Tuesday the 14th of April 2015. We're looking at the Euro-US dollar on the 15-minute, and really the subject of this blog is just really to share with you what do you do when things go wrong. We're looking on the 15-minute chart purely to give you an indication of what happened. There's a couple of things here that you do need to note, which is this was a very nice trade and it happened yesterday morning and it was straight off the European Open. Okay, price came, it followed all the principles. Price pulled up, this is the Asian session, price pulled up into resistance, long wicks saying it can't get any higher, there's selling pressure coming in. We also had the MACD turn and break below the zero line, okay, and price just fell. And yes, it was range bound based on these moving averages that were running across here, but it was starting to push down here, so it's saying it's in transition mode. And eventually when it broke down here, obviously the trend line started to push down, saying yes, definitely selling off. Well, we could see that because guess what, the price was pushing, was falling. Run a nice trend line along here. When the trend line gets broken down here, we're out of the trade. So very, very nice, very easy trade. So if we sold here at the bottom down here, let's see, I'll show you just how much money was made there. So we sell there at the 105.94, okay, and we're back out at the 105.32. Yeah, so there's over 60 points of profit made in that trade. Okay, just using those principles. Yes, price moved more than that, but there was 60 points there. Fantastic. That's a 3-day target. That's 3 days target made in 1 day. Yeah. So what happens after that? Well, we're sitting here at this point and we're waiting for the New York Open. So we're looking at the afternoon session, and the New York Open is around about here. Yeah. So this sort of session, this is where it goes. And typically, this is not always what happens, but as you can see, New York reverses the whole move, doesn't it? You can see that. But the reality is that if we scroll to the left, what we were actually looking at was that we were in an overall downtrend. This was just part of the downtrend. So the previous day price sold off. We had the Asian session, which was pretty flat. European session sold off again. So we were looking for a potential pullback up to what was previously support to then sell off. And what happened there was, well, it didn't happen basically. Price did come up to it and started to sell off, but it couldn't get below this previous level of support down here at the 105.50, 105.47 level. Okay, it did get as far as the 105.45, but that was just like a touch and then it pulled back. As you can see, there's a very strong spinning top doji pattern here, which as it was forming near to an area of resistance, you would suspect that that would therefore be saying there's a clear reversal happening here. And it did reverse, but only for one bar, one candlestick. After that, the candlestick that came back in showed there was massive buying pressure. And sometimes that's just what happens. If the price doesn't want to go down, and it's trying to get down and trying to get down, and it doesn't, and then it goes the opposite way, well then, there you go. Clear signs that it wants to do the opposite. Now, what do you do in that instance? Well, it's quite simple. You close your sell order, okay, and you minimize your loss. Okay, you take a loss, you take a hit, because guess what? If you'd have let price come all the way back up to here, you'd have seriously got hit, wouldn't you? Yeah, you'd have turned a loss. Let's say your stop was somewhere up here, and then you move your stop right the way up there. You've just taken an extra 30-40 points of loss. And you see, there's no guarantee where this rallied all the way up to here. There was no guarantee that it wasn't going to keep going all the way up, because the banks do what the banks do. I'm not a banker. I'm not sitting there with billions of dollars in my pocket. I'm just observing what the charts are showing me and telling me in terms of what price is doing. And you have to go with the momentum. You have to go with the direction of the price. And in this instance, price was saying it's going up. So don't hang on to it. Close it. And if you want to, because there's so much momentum going in the opposite direction, I mean, this candlestick was huge, yeah? And halfway up there, when I go down to a smaller time frame, there was a small little pullback. So price did pause for like about 3 minutes before it carried on pushing all the way up. And this was an obvious target to take out, to close out your buy order. So I flipped my sell into a buy, closed out at the top there, all the money that I'd lost as a result of this trade not working out, I made back plus the same amount again. And I actually hit my target for the day and I finished. So when the market goes against you, if you're quick enough to flex in and out, then you can still make money in it. Okay? But be very aware of what you're doing, and that comes through time and education, etc. And all the very best for your trading. Bye-bye.